Now let's look at the IRR function. The internal rate of return, that is IRR, is the interest rate received for an investment consisting of payments and income that occur at regular periods. If it is payment, will indicate with negative values, and if it is income, the function will return the positive values. The description for this function is returns the internal rate of return for a series of cash flows. These cash flows do not have to be constant or same, but they must occur at regular intervals such as monthly or annually. The syntax for RRR function is where values, which is required argument, and guess is an optional argument. So values is an array or reference to cells that contains numbers for which the internal rate of return needs to be calculated, and guess is optional. This is a number that we guess is close to the internal rate of return. If it is omitted, it is assumed to be 0.1, which is 10%. So let's take an example for this. Here we have a cash flow that has been recorded for 5 years, including the initial cost of business. So initial cost of business is 70,000, and because it's a cash outflow, it has been indicated as minus 70,000. Then we have the net income for first year, second year, third, fourth and fifth year. With we have cash flows, various cash flows. It is not constant. Okay. So we need to calculate the internal rate of return over first 3 years of business. So we'll say here equal to, we'll put function IRR, and we need values here. We want only IRR for first 3 years of business. We'll give the array, this is the initial investment, first year, second year and third year. So that is the range of C9 to C12. Okay. And will not give any guess here. So default guess will be 10%. So we'll enter this value. So we got IRR is negative 18.2%.